The silver price is looking very good the past few days, and this seems to be a very good opportunity to go out and look for exciting silver stories. You can go and look for exploration companies with a little bit more upside, but also a little bit more risk. But you can also go ahead and look for exciting producing companies that have still a lot upside, even with the rising silver prices. And today with me is Arturo Pastano. You are a CEO of a silver producer, actually, called Santa Cruz Silver, with producing assets in Mexico and Bolivia. And Arturo, actually, you and Wolfgang, you know each other for quite a while because we have been representing the company like many years ago here in Germany. And there was a tremendous change since then. And we are going to talk about all of this. First of all, thank you for your time. It's good having you.
My pleasure, Jan. Thanks for having me here. And I'm very excited to be here with your audience today.
Very good. So let's have a look at maybe the silver market in general. I think that's always cool to have a statement from a silver CEO. How do you see the market at this point of time? I mean, the silver price is doing very good. You must be very happy, right? What is your outlook for the future here?
I'm happy indeed, actually, Jan. And I think it's about time where silver start revaluating here. I do see silver coming, stronger for the next coming years. As you know, there's, the ounce being produced worldwide cannot cover the demand of silver today, no? And more so as artificial intelligence is coming to play, as renewable energies are coming to play, more and more environmental infrastructure is actually in place, which all these required silver for their operations. No, so definitely I'm very bullish on silver and how the outlook looks for the next coming years.
Very good. So are we. We are very bullish as well. And I think it's a good thing for us to have a look at the company in general. You are sitting right now in your office in Mexico. This is what you told me. And way back when you and Wolfgang worked together a couple of years ago, you have been basically a Mexican silver producer. But there was a shift, and I think looking at your share price, the shift was very good. You are now producing in 2 countries with 6 producing mines, and you're also not just in Mexico, but your main focus is now Bolivia. Give us a rundown what happened, and maybe you can give us an overview first of all about the company. 6 mines, that's a lot.
Definitely. Well, for us, it was a great opportunity, Jan, to buy all Bolivian assets from Glencore back in March 2022 when we closed the transaction. And from there, at that point, we took over those assets. We increased production across all the different assets in Bolivia. And now, combined with Mexico, we are producing north of 18 million ounces of silver equivalent on a yearly basis. We're definitely very happy and with how our Bolivian assets are developing, and also our Mexican asset, which most of your audience must be a little bit aware about them because those are the assets that we used to have in the past. But now we have in Mexico one only asset, the Zimapan mine. It's a large asset, produces around 4.5 million ounces silver equivalent. And as we speak, that mine is just starting to develop and to start adding production from level 960, which is the future of that mine, and will give us production for many years to come. So we're very excited about Mexico and Bolivia as well. So I'm sure our investors will see the best of these mines coming in these years.
Very cool. So obviously a lot of questions come into my mind, right? And if I have a look and you're telling me you bought all the Bolivian assets from Glencore, why do you think Glencore decided to move out of Bolivia? Are you buying now the bad assets, if you like, or do you think you made a very good decision here and Glencore was basically stupid to give them away, if you want to say it like this?
No. Glencore, actually, I tilt my hat for Glencore's management. They are, as you know, very professionals, and they definitely know what they do. What happens, Jan, is that Glencore has a premise about the assets that they want to run, right? So they don't want to run small assets for them. These mines, we have around, as you point out, around 6 mines. There are 3 mines with 1 mill, another mine with 1 single mill, and a third mine with 1 mill again. So you have 3 milling facilities and 5 mines running. These are small mines, and Glencore has a premise about the mines that they want to run and they want to keep in their portfolio. And don't stick to these numbers, but I think that they are looking for assets that can produce north of 200,000 tons of concentrate a year. And these mines all combined can produce that, but there are 5 mines running, no? So that was the first box that checked into their divestiture portfolio of assets. And that was the reason that they sold this asset. Same as these Bolivian assets, it happens the same in Peru and in some other places where they run these small size underground mines. But that was the main reason, Jan, in my understanding.
Okay, no, that's very good. We have seen that, especially in our investor community with other companies, right? You're being a mid-tier producer, if you like, and sometimes you get the opportunity to buy very good assets that just don't fit into the large-scale company portfolio anymore, if you like. And then you have the perfect sweet spot opportunity. Basically, there are not too many buyers. You can get them quite cheap. We will talk about the terms of buying those mines in the next question, right? But sometimes you can get really good upside as a mid-tier producer from those kind of mines. And I think this is what we are seeing here with you. As I said, your share price has increased very good since you bought the assets. Obviously, the higher silver price is helping you, but it seems like you made a very good decision here. Talking about this acquisition, give us an idea, how much does it cost to buy mines from Glencore? We're not talking about one, we're talking about several. And are you debt-free or do you still have to cover the costs?
That's a good question, Jan. I mean, the original transaction was 160, 100, close to $170 million US, no? And we have a different, let's say, components into that share purchase agreement. One of them was a catch component, it was for $110 million. Then you have all the value-added tax that was generated when Glencore was running these assets. Once we collect that from the Bolivian government, we should return those to Glencore. Those are around $58 million, $56 million. And finally, $9 million that were left in the inventory when we closed the transaction. So all combined takes you to close to the $170 million. That was the original transaction or terms, right? We revised those terms throughout the course of the last years. And in October, we announced the new terms or the revised terms where you have 2 components only, making it very simple. You have a cash component payment for up to $80 million, or you can accelerate that payment and pay $40 million on or before November 1st, 2025. We're choosing that. We're choosing that program. We're accelerating the payments. So far, I mean, we had paid $25 million. We still have $15 million to go. And we'll make the next payment now in September for $7.5 million, and the final payment in October. That will release the cash component at 100% and will save us $40 million because we will not need to go on a $10 million payment for the next 8 years, no? That's one component. And then another $77 million that have to do with what we call conditional value rights, right? These mines produce a lot of zinc. So when zinc crosses the line of $3,850 per ton to play, and we start paying Glencore $1.3 million on a monthly basis. That being said, you're paying around $16 million on a yearly basis. It's only zinc that the trigger here, no? So if zinc comes down again from 3,850, you stop paying at that moment, no? So as you can imagine, if zinc goes to those levels, we'll be making a significant amount of money for us, and paying $1.3 million will be something that we would love to do, no? And on the other hand, sorry, we're keeping all the value-added tax that was generated back then, which is $56 million. We are keeping the $9 million of inventory that was left in the assets. And finally, we got rid of all the NSRs across the assets now. I forgot to mention that the original agreement include an NSR, 1.5% NSR, which today, with today's metal prices, it's around $12 million a year, no? So we got rid of that as well. So it's a very clean and simple structure. As I was pointing out, the cash component will be amortized fully now in October, and that takes the company technically to a cash-free position, right? We're generating around $130 million EBITDA on a yearly basis. So we're well positioned to keep growing this company for the best of our investors.
So Arturo, you mentioned you're doing payments obviously to Glencore. Can you cover the cost, or do you need to make very good money now? How does your treasury look like, and do you see upside potential for the future as well?
Absolutely, Jan. Well, we have two more payments to make to Glencore, $7.5 million each of them. The next one is in September, and the last one in October 30, around the last week of October. But today's treasury, we have north of $60 million US dollars in the treasury. So we are in a, let's say, comfortable that we'll be meeting our objectives, our payments without a problem. And yeah, we keep building the treasury as we keep moving forward.
Very good.
In addition to that, Jan, finally, I would like just to point out that even though we have a strong production today, we have also additional assets that we organically can grow for another 4 million ounces of pure silver. The Soracaya property in Bolivia, it's an advanced brownfield property where we have full permits to produce process around 450 tons per day. That's half of the budgeted production, but that'll give you around 2 million ounces of pure silver a year. And once you reach full production, which is 800 tons per day, you will be in the 4 million ounces of pure silver a year, in addition to the 18 million ounces of silver equivalent that we produce today. So we definitely have organic growth within our portfolio of assets, and we're going to take advantage of those when the right time comes.
No, sounds very, very good, Arturo. Maybe in the end, because you mentioned that already, right? You have the zinc component and there are some other metals. I think I looked it up. You almost produced 3.7 million ounces of silver equivalent in Q1 this year. And roughly between 40 and 50% of this is pure silver, right? What is the rest of that? And how is the silver price really improving your economics, right? Let's say silver goes up to 50. Is that really helpful to you, or could that also be impacted by the other metals prices so you don't get as much as expected? Give us a little bit of an idea.
That's a good question, Jan, and definitely silver plays a role, a very important role. As you point out, is nowadays with silver prices is north of 50% of your revenues are coming just from silver.
Okay.
So definitely it plays an important role, and we're focusing or orienting our production to those areas with more silver and fine-tuning our milling facilities to have better recoveries on silver than they used to have in the past. So that's definitely helping. As you point out, we have also zinc as another important component of the company. So the next important metal that we produce is zinc. And finally, we have some copper in Mexico which you will see increasing in the next coming years as level 960 has significant amount of copper when compared to today's production. So we expect to increase copper production for the next coming years as well.
Very good. I mean, if we see now the rising copper prices, right, you seem to be very good positioned here, not just in the silver industry, but also in the copper. Cool. Arturo, I think we covered for, let's say, an introduction to the company a lot. Is there anything else you would like to mention in the end?
No, I think, Jan, I mean, it's important to have a clear view of the company. We, as I was pointing out, we're in a strong position today, more so with today's metal prices. We have achieved efficiencies across all of our assets throughout the last years, and we're ready to take advantage of today's metal prices. So we're producing cash flows. We're cleaning our balance sheet in 2 months' time. I mean, by October, we'll be technically free of debt once we amortize the full Glencore cash payments. So the company is ready to take advantage of today's metals cycle. So.
Very good, very good. I think so too. We are on a edge to another bull run, right? Not just in the metals, also obviously in the mining industry, the mines that produce those metals. And it's very good if you're not just positioned in one metal, if you can get the upsides in other metals to be a little bit diversified. Arturo, thank you very much. It was great having you. Obviously for the audience, we will link everything you need to know in the description. And this is no investment advice. Please make your own due diligence before you invest into a company. Arturo, thank you very much. It was great having you.
My pleasure, Jan. Thanks for having me here.